Hello, everyone. And Elon made a big bet on Trump. His next big bet is on autonomous, and the chance that that will work goes up a bit depending on how much of it can be sustained. A smart investor would ask, what is the real play? We've already talked about these numbers, but to review, if Tesla gets a 50% share of the U.S. ride-sharing market by 2030, which I think is a reasonable goal, we'll talk about that another time, that would add about 20% to their operating income. Since their stock is up 15%, that means they can take this to other parts of the world, but a lot of it was priced in too quickly. I'm a big believer in what that means. Elon is talking about 2 to 4 million robotaxis a year, which is about a third of all Tesla sales. That's one thing that maybe wasn't taken into account today. I'll go with the under on that one. I think it's more likely to be between 1 and 2, but that's another thing. Melissa, to answer your question, it seems like some of the robo-taxi business has started to price in. He seems to have the magic touch right now, and the year is still young, so I think there will be cases. SpaceX will clearly benefit from this. Phil talked about the possibility that the tax credits will go a long way towards EVs and may last longer than expected. So there may be another angle for Tesla in what's going on with X and Twitter. He may be able to continue to grow that platform in a more free speech-friendly world. And finally, don't forget about tsla. Regarding the AI issue, the chance of some AI-related regulations was reduced today. However, I believe that this is still going to be a very busy time for building the infrastructure that's needed. They just raised a lot of money, which is a good sign, so I'm trying to think of a way that this could go badly for Elon. With Tesla's impressive growth, it's not enough for Tesla bulls and people who are always on the lookout for the next stock market gem to sit back and watch. Seeking Alpha has everything you need to know about Tesla. Tesla stock price goals, Tesla's new ideas, and everything Elon Musk. Clicking on the affiliate links in the description and making a purchase may earn our channel a commission as long as he's showing his face and on earnings calls. And there's a perception that he's a part of this that's probably 5-10 hours a week. I think investors are going to be okay with that, because they've just grown desensitized to the number of things that he has going on by my last count 5 companies. And now you add this to it, I think that there's kind of a point where people just fall back on, hey, he's done it before, and he'll be able to continue to do it. So any normal person, this would be a Tesla would have sold off and said they're going to be spending some time working in the government. But this isn't any normal person. Yeah, I want to put a little bit of context on next quarter, is that they did give some guidance related to what the revenue is going to look like. They said they expect deliveries for 2024 to be up slightly. That basically implies 10% growth for the December quarter for deliveries. The street was at 0.5, which is 1% growth, so their December forecast was a shock. I was expecting the profitability to actually be below the street. I was not expecting them to move up, so as somebody who's optimistic about this caught me by surprise, kind of the strength in these numbers. I do want to highlight the important point on the profitability. This 17.1%, that AUTOX credit number, that critical number that we've all been talking about, that did have a benefit, a one-time benefit of some of the Cybertruck FSD recognition. We'll hear on the call how much that impacted, so I suspect that there's going to be some dial back on that. Either way, it still likely will have beaten where the street was expecting for the margin number. Number one question is out of this what this new vehicle looks like, and ultimately, is it just a like an odd adjustment to Model 3? That's what I'm going to be focused in. Are they going to give any color? The reason they didn't talk about that at the We Rollout event, they don't want to show an image of a new vehicle coming and slow existing sales. So it makes sense that they held it to this up form and hope to get some context in terms of what that vehicle actually looks like. That's generally where consensus is at now, is that they're going to have to use the existing. They don't want to, as you said, kind of spin up Giga Mexico. That's probably not going to happen. That would be the case if they were making progress on Giga Mexico, which they're not for kind of a smaller 2-seater. So I think it's optimistic to think we're going to see that. Initially, I thought maybe because they're building some of them for the Sire Cap, but I think that investors should probably put their head around a stripped-down Model 3 here to get to this. I like what Dan said, they're not going to hit the $25,000. It's probably going to be $30,000, but keep in mind, this is the part that boils me away, and that I think investors should be contemplating here. They've cut their cost by 6% year over year on doing EVs. They're making money on EVs. Other car companies are retreating. They're doing that with some of these lower cost vehicles. ASAPs are down 6%. It's good that they're doing all the right things to get ready for the future of building electric cars, but I think this is still a big problem for traditional automakers. How are they going to solve this problem when they're not investing in production of EVs? It's kind of fallen below the fold here. I think what's most important is that they see growth in China. When are they going to see growth that has been a headwind? Let's call it China's be 15 to 17% of all units right now. And it's important to answer your question, Dan, how did they get there? I think a lot of it had to do with what happened with Cybertruck. As someone who has supported what Tesla's doing and is optimistic about where this company can go, I was shocked to hear that deliveries were down 9%. The first thing I asked was how ads were going to get the message across that there would be more negativity. I just want to put that in the context, is that going into today, the street was looking for about 15% delivery growth in 2024. If you look at the numbers they just reported and assume that they can grow deliveries 10% sequentially for the rest of the year, deliveries will be down 3% for the year. So this is probably more ugly than it seems even today, and given that change and look what happened in the stock, I don't think that's fully priced in. So I think, Dan, you've been clear about that $100. I don't think we're going to see a 100, but I do believe that the stock is going to go lower because this is going to be what I think is going to be kind of the kitchen sink where you're going to see analysts, I had that job for a long time, throw on the towel and say that this is going to be over for a long time. So I want to point that start there. Second is the bigger picture. And I think, Tim, you were talking about just, this EV. And the EV picture, just to frame that in, that's a $2.5 trillion market. What's the auto market going to do eventually? The EV panel talked about when that will happen, and I think it will happen faster than most people think, even though today's delivery numbers are so bad. The reason for this is that I think one of the biggest reasons for these terrible numbers is that there was so much excitement around EVs. People who usually buy a car every 5 years probably moved it forward and bought it 3 years ago, which brought in a lot of demand. I think eventually that just start. I'm guilty of being too optimistic, but I think they get to the other side. Dan, you brought up SSD, and I agree that it is an important part of this. If anyone has tried SSD, the beta they released last week is a step function better than anything they've ever done. I think that will happen in the next year or two. I think that will be another catalyst. That's where I stand. But do you know who else?